for joining us as we host the first Property Market Leaders Insights webinar. With me is a very familiar face to all of you in the industry, Hayley from Lightstone. Hayley, thank you so much for joining us and sharing your passion and insights with our viewers and with us around what is the property market doing in South Africa. With me on the right is Gregory Mason. He's our head of legal. He will be facilitating off screen. So please remember, pop in your questions as we go through. He will interrupt us if the question is relevant. Otherwise, at the end, we will have a Q&A session. Hayley, I would like to start and ask the question first. What do you think is the overall sentiment around property in South Africa?
So thank you, Valdo, and thank you for sharing the stage. I mean, it's always exciting to talk around the property market and what's happening. I think the sentiment at the moment is very localized, once again, with property being location, location, location. I think the majority of the areas we're finding that it's very much a buyer's market. Mm-hmm. I think there's some areas that are still flourishing. We'll get into that detail a little bit further down, but Western Cape is flourishing. So once again, there's areas of growth and there's areas that are really kind of level. So that's really what we're seeing.
And you say location, location, and when we publish some of our data, one of the things that really pops up for consumers is location, 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 and predictability, where people want to say, yes, I want to be able to know that the area that I live in is going to grow, that they're going to be able to look after the infrastructure, and that is why we see certain areas continuing doing very, very well, although the consumers are struggling. And we cannot start any property conversation without really looking at how the property market has performed on the back of various interest rate hikes. Yes. And it's synonymous that we look at property and interest rates. But there's so many other factors that we should consider, and I think we'll touch on those as we go through. We'll raise beyond just interest rates, but it is the big topic of conversation. We're sitting at 11.75%. And we expect those to go up. And I know you've got a very good prediction or forecast at the end of our conversation, so we look forward to catching up on this. But first, we want to look at the South African property market performance and what the composition is. And Hayley, this is data that you specialize in. So I'm going to leave it up to you to take us through this. And if I've got questions, I'll interrupt as well.
Great. So always good to kind of lay the foundation and get a sense in terms of what our property market actually looks like. So what does the stock look like? So we're sitting with about 8.4 million properties, and that includes all properties, right? So it's all legally registered properties. If we look once again at residential and we take that out, you're looking at about 7 million that are residential. And then you've got a split there in terms of your sectional title, estate and freehold. Obviously, you can see the freehold dominates that with 80%. But once again, if you look at the value at the bottom in terms of the trillion, which is 6.7, you can see the differential there on estates. So you've got a really small volume of estates at 7.2, but you've got a big value of it in terms of the composition, which is talking to kind of where people are finding value in property, which is also interesting in itself. It's your sectional title, very small differential in terms of volume and value. And it's been quite interesting to see kind of how sectional title has kind of fared through this phase. Looking at COVID and post-COVID. And then just on the right, you're looking at bonded. So this is always interesting to understand people buying property. We automatically think that there's a lot of property being bonded, but when you look at it, it's actually only 31% of the properties that are bonded, and the rest are kind of either owned or bought with cash. The value, however, different story. You're kind of seeing nearly 50% that are sitting in bonds. So
it comes back to the conversation we said interest rates is very important to the property market, but considering that you see that 50% of the volume is outrightly owned, and I just want to touch back on what you meant, the value around estates, and it comes back to security. One of the other key trend drivers in South Africa is safety and security in estates, as well as sectional title they provided, but it's also collective budgets that can be allocated towards infrastructure development within your estate. There's just a little bit more money going around than a standalone property.
And then if we look at kind of how it all stacks up. So what we've done here is we've given a view around different price bands in terms of where properties, the value is sitting. At the top, you're looking at the value. At the bottom, you're looking at the volume. So basically how you read this is that 0 to 250,000, the value of a property, 25% are sitting in there in terms of number, but it only accounts for 4% in terms of value. Then on the other end of the spectrum, you're looking at above 3 million in terms of properties worth more than 3 million. And the value there, 27% of the value sitting there, much smaller in terms of volume, which is 5%, which kind of just speaks to, it's a natural kind of understanding and it makes sense. So that's kind of the flow in terms of how we stack on value of property.
Yes. And it's interesting to see, it's almost mirroring in the South African market, the number of employees versus the salary brackets, etc. Yes. When we looked at the property market stock, one of the key things for TPN is looking at how the both sectional title and full title, and it's very important that for us to look at them as they behave very differently. And the average rental across these, and this data was pulled for Q1 2023. And we pull data from our various landlords as well as those that submit data through to the system. And what's very interesting here is that we see within your full title, Western Cape, of course, ranks very, very high. On the opposite of that, this sectional title, KwaZulu-Natal, remains the highest rental. Then Gauteng, pretty much staying within the top three. Then you've got Free State, of course, the lowest rental across both types. And we haven't seen a huge amount of changes here. We have seen that the Western Cape has always remained kind of very high when it comes to full title. And again, it comes back to safety, security, the infrastructure that's provided. But for me, still a surprise is KwaZulu-Natal's sectional title. So it would be very interesting to see how this is going to pan out going forward. If we look then at how residential property is positioned, we've always known Gauteng as being the economic hub. It's where most of the properties are situated. But we've seen a change on the rental side. Have you seen that change happening in terms of transactions and value?
So it's been pretty similar to what we've seen. The change that we've seen is obviously the movement to Western Cape, which we'll get into around Semigration. But in terms of the three main provinces, Gauteng, Western Cape, KZN, that's where the volume and the value is all sitting. And that numbering hasn't changed in a huge way. So it's quite interesting when you actually see, we'll get to the numbers, the actual numbers, they're not huge in the context of how many properties are actually transacting. So, but it's interesting to see that it's increased, right? So, and speaking earlier around these states, I think the other aspect is lifestyle. People are wanting a different lifestyle.
Yes.
Ever since we've gone through COVID, people have had an opportunity to move elsewhere. They can work remotely. This is what has pushed the Semigration to increase that move. But I also think from an estate perspective, it gives somebody a different lifestyle.
Yes, definitely. And it's not just a South African phenomenon. We look at Semigration and we see it as a South African phenomenon. It's a global phenomenon. I have extended family in the US, and just past COVID, how states' property prices has quadrupled because of that movement. That people saying, well, I can work from anywhere, I can work remotely, and they want a better lifestyle, or they want cheaper rates and taxes, or they want cheaper utility bills. So they move around. And so when we look at the movement within rental stock, it is very interesting when we look at the 2010 census data that gives a very good, accurate view of how many homes or households are renting properties versus owning properties. And then on TPN, we run an algorithm and a formula in the back end looking at all properties on the deeds database based on the rental data that we collect. And we have seen some really interesting trends. We have, of course, seen the Eastern Cape had a good spike in the number of properties that is rented. So we also refer to them as investment properties. So these are properties that is second, third, or fourth to a owner. A little bit of an uptick within Free State. Gauteng, you can see that red line, it's dropped substantially. The number of investment properties, therefore, in Gauteng. Another big spike, of course, is Limpopo and Mpumalanga. That is also where people are, of course, having a place within a CBD or within Sandton or within Cape Town, but they then have a family holdings within Limpopo. And because the value of the property in Johannesburg is potentially higher, we therefore classify that as their primary residence, and then we look at their family homesteads as a secondary property, and that will be classified as an investment property. We have a small downtick within the northwest, but if you then look at the Northern Cape, Western Cape, and the Eastern Cape, those three really had very big spikes, and it comes back to that coastal living lifestyle, where people are saying, well, I can do another property, or let's do an investment property there and put it out for rent, and that's why we're seeing these movements. Then our rental market distribution, and this links back to your value and volume. And where's that sweet spot? We always have, where's that sweet spot? And if you then look at the distribution and the green bar, the 3,000 to 7,000 rand a month rental, that is more than half of the rental market in South Africa is paying that, the formal rental market. And I'll put that caveat out there. It's the formal rental market. Then we have at the lowest 25,000 or more, that's 1.2% of the market. If we break down the 3,000 and 7,000 mark, the 4,500 to 7,000, that's slightly higher. That equates to 32%. And then the 3 to 4.5 is the 17% that makes up that market. So you really have this mid-market that's 3 to 7,000 that makes the majority, almost 50% of the rental stock in South Africa. It has made slight movements as rental escalations accelerate. You see the volumes move slightly up, but there's still a big demand, and we'll see how the performance of the 3,000 or less, those that is at the entry level of the rental market, has performed over the past couple of months. Semigration.
And just a question on that. It's quite interesting to understand for that 7,000 what each area actually gives you.
Yes.
So I would imagine, like a Western Cape or a Cape Town, you're going to get a 1-bedroom, but maybe in Johannesburg you'll get a 2-bedroom.
And that it's a trend that we've been speaking about some time, is how for cost effectiveness we'll say, listen, I'll go and rent a bigger place, but we'll buddy up, or we'll have 2 young professionals, we'll share the cost. It's still cheaper than going for a studio apartment, but now I've got a 2-3 bedroom, more space, so we share the cost. So that then also impacts on the demand for that space. Slightly bigger space, you have better facilities, and people are willing to share. And it's one of the big conversation points, is the co-living, co-working space. And as you mentioned, COVID has if you were locked up in an apartment, on the 10th floor, and you haven't seen grass for 3 weeks, and you were alone, you would want to have a space that you can share. Links back to estate living. So semigration, and we speak a lot about it, and it's a trend by default of that we speak about it so often. But what does the numbers tell us?
Okay, so what I'm going to talk to, probably the best way to describe this graph, the percentages are sitting on your left. If you look at the navy bars sitting at the top of those bars on the left, it kind of gives you per year, and it gives you the actual number. Those numbers then correlate to the graph on the right, which then talks to where people have actually moved. And you can obviously see the red element is your Western Cape, right? So that stands out in a great way. And what you're seeing is the increase. So, if we look at 2019 and we look at 2021, and then we look at 2022, you can see that increase of the number of people that are moving. And I don't think it's necessarily going to slow, and I don't think it's going to stop. I think we've all kind of moved into more of a hybrid situation, where it's a lot more easier to have a conversation to say, I want to move, and will it be okay for me to work elsewhere? But you're definitely seeing the move to Western Cape and the garden route. So that is where we've seen kind of the biggest flow of people moving out of predominantly Gauteng.
Yes, and the rental statistics is echoing it. If we look at the vacancies of Q1, the Western Cape is sitting at 1.33% of their properties are vacant, compared to a national average that's sitting at 6%. We have some provinces sitting in double digits. So we've seen that there is a movement towards the Western Cape specifically. And interesting, Eastern Cape has recovered from a very high vacancy number. So we're definitely seeing that movement still taking place. And I totally agree with you. I don't think it will necessarily change in the short or medium term. But interesting is if you look at the actual numbers at the top, and we know when you look at the total numbers of properties in South Africa, it starts giving us a bit of a picture that it is not a mass exodus, a mass movement, but there is a movement, and we should be aware of that.
Yes, and there is an increase. Foreign ownership. So foreign ownership is always topical. We always see that penthouse or that house that gets purchased in Cape Town at some 68 million rand, or, you know, so there's a lot of interest around what's happening in foreign ownership. But once again, when you start drilling down into the numbers, it's not big. So if we look at kind of, and it's pretty stable, there isn't a huge increase. If we look at the 8,000, 7,000, 9,000, that's really the number of people that have bought in a year that are foreign, right?
Yes.
So it starts giving you a sense in terms of the size. And different in terms of, if you look at the right, in terms of where they're actually buying. So actually on the left. So it's actually not the Western Cape, which is
very interesting.
It's your Gauteng, it's your economic hub, which is kind of where the foreign ownership is concentrated. And if you look on the right, it's giving you kind of more of a sense in terms of what value they're buying. So you start getting a sense also that it's not the huge luxury all over. It's actually workable. And when we think foreign, just bear in mind it's Africa as well, right? So, you know, people moving in and finding work and then buying a property in South Africa.
Or as an investment property, you know, look at the African continent. It's, South Africa and Johannesburg has been that the Paris of Africa. It's been hailed as the London of Africa, and people do come here to invest properties. They see it as a safe place to invest, as a second or third home. But the headlines are not made by the 2 or 3 million rand or the purchase of an apartment in Sandton. It is the 60 million that was bought by one or other foreign celebrity. And yes, with the rand being as volatile and I think undervalued, that it makes a really good case for someone to bring in a retirement fund, their retirement from a pound-based, dollar-based into South Africa and say, but I can really have a good lifestyle. And when we talk always about property and we talk about, you know, the economic environment in which we function, and we can go negative quite quickly, we forget that we do have a lot to offer. South Africa's property market has a lot to offer, and the value that you can get with, you know, if you bring in a £500,000, what you can buy in South Africa versus what you can buy, for instance, in the UK is vastly different. And that is definitely going to drive foreign ownership. And but as you said, the numbers are not staggering, as sometimes we are made to believe if we read the headlines, that the Atlantic seaboard has been taken over by the Germans and the Brits. Property market growth and the economic indicators, and we touched on it right at the beginning. And I mentioned interest rates, but you've got another one that is critically important, and I think in both our worlds, in property purchasing, but also in rental markets.
Yes. So it's one of the, so at Lightstone we do a valuation model. So we're constantly assessing our properties, and one of the factors we look at is your consumer price index. Very important to understand how your consumers are actually feeling. So if the market is favorable for a consumer, they can afford to buy property. What we're seeing at the moment is it's not favorable. We're seeing that the price index has increased. So this is where you assess basically your basket of goods that you're buying. How much is that going up on a monthly basis to give a good indication? And we've seen that being increasing for a while. So what that does is it actually starts hurting your consumer, which means they really don't have that money to buy a property. And this is where it becomes really important, where rental then starts becoming the flavor, right? So buying a property becomes a lot more expensive. And we look at these indicators to help us assess kind of where we're going and what we anticipate in terms of the growth of our property market.
And in both cases, when we talk about, you know, it's either or. In a lot of the cases, it's not, because you have people just deferring their purchase until they have better certainty. around what the interest rates are doing, what the economy is doing. Am I secure in my job? They're deferring it. But then on the other hand is we have investors. And a lot of the viewers online is investors and property owners and want to grow their portfolio and saying, all right, it is now a good time to buy and move that into rental stock. Because in the past couple of months, we track CPI, we look at the interest rate and then demand. And residential rental demand and supply rating was created. Now, it looks like a very busy graph for those that's viewing it. But basically what it's saying is that we're looking at demand and supply. And if demand equals supply, there's an equilibrium. When we start seeing that the demand, the supply, there's more supply than demand than what we're seeing during COVID, it pushes down your escalations or your rental's ability to grow. And of course, that pushes up vacancies. So as soon as we start hitting the equilibrium and you see that big spike at 13.31%, that was during COVID for our vacancies. At the same time, we saw de-escalation. So in some provinces, specifically the Western Cape and Gauteng, the two major economic hubs, we saw a decrease in the value of rental. And landlords did it, to assist people staying in their properties and to negotiate to say, listen, we don't know how long this will take. Rather stay in the property. I'd rather take a bit of a haircut and I have my property occupied because we saw these escalations increase. The interest rate hikes have really benefited the rental market to a large degree. We're sitting with a TPN Market Strength Index of just under 60, so it's above market equilibrium, meaning that there's a higher demand than what there is supply. We looked at the recent new stock that might be coming online. It has slowed down. Of course, people building new stock, it is not all done cash. It is geared, and the cost of capital is becoming more expensive. So there is a bit of a holdback until they see, right, let's get escalations back up, because we came from a very low base during COVID. We are now sitting at 4.17% escalations on rental nationally. Again, every province is different and has a different mix and time on catching up. We saw KZN never dropping below a certain point, while the Western Cape is. But now we're seeing the Western Cape a much sharper hockey stick up as they try and catch up.
Cool. So maybe just talking around market activity on the sales side in terms of transactions, what you're looking at there at the top is your value and your volume once again. Kind of follows a very similar trend, if you see that. The kind of dip there is the COVID, where nothing was happening, right? We were all stuck in our houses and nothing was selling. So the interesting aspect here is probably the bottom graph, where you kind of see the change in terms of where the sales have actually been happening. So you see that bottom, which is your up to 250,000 kind of price point for a property, that kind of diminished through COVID and coming out as well. There's been a lot more transactions on your higher value properties, which is interesting. So it's kind of entering the market, bearing in mind that after COVID, it was the perfect time to be buying a property. We were at the lowest interest rate in 50 years. People could afford to buy a property. It was something that they obviously loved. And we saw that in the stats and we saw that in the numbers. And you can see it in the value as well. So that we found really interesting. I think also just a caveat, we think 250,000 is kind of your non-urban, bearing in mind it's also your small towns, right?
Yes.
So a lot of small towns have properties that are sitting in that category.
And yeah, we tend to forget that there's the peri-urban, rural areas, and there's these smaller towns that has land and properties for sale, and we get kind of accustomed to scrolling through private property or Property 24, and it's 4 million and 5 million, but that makes such a small portion up of the market.
Tiny.
And when I have many friends that after COVID, being cooped up in a small place, wanted space, and they needed a new office, and they could afford paying, getting bigger spaces because it was the interest rates were in our favor. It would be interesting to see what the defaults from the banks are. That's starting to happen, and as people were extended, and of course we have additional expenditure, keeping the lights on. Second one is rates and taxes that increases substantially, water and sewage. So these compounded effects that's having on a household is in my view dramatic at the moment, and a lot of people have to pull back, and it's going to put some of the debt at risk. But overall, I think the market has bounced back very well from COVID, considering it's like when you look at all our graphs, we've got this big V.
Yes, and a big spike up. So just looking in terms of what we're looking at, where the banks have granted bonds and where they've focused, not a huge kind of change. You can see the lines are pretty similar. If you're looking at your super luxury, your mid value all sitting at the top, your high value also at the top, low value obviously not really a market where they like to focus. And then at the top is just giving you a view in terms of your bonded transactions and the bonded value. Once again, a very similar trend if we kind of just want to look at that and going back into 2018. I think, you can kind of see the uptick in 2020, which is after the COVID, which we're seeing, but we still have never reached the levels of 2007, 2008 before the property crash.
Yes.
That was at an all-time high, and we're still not there. So it's quite interesting.
I'm going to put you on the spot here.
Yes.
In terms of a lot of people are going to their banks for their solar power, alternative energy. Do you see that banks are going to be redirecting or taking a less of a risky approach and push more capital towards that? And do you foresee that they are still willing to provide the 90, 95, 100% bonds going forward? We saw that appetite, especially 2 years ago. They were willing to bond at 100%. And considering that people are now going back into their bonds, accessing some of that funds, will banks be capping it? Do they see that solar is providing value to some of the households?
So it's quite interesting. I think there are certain, once again, affordability of solar. I think if we look at what it actually costs to get it in, is once again, you're looking at a price bracket, a value of a property in a certain area. And it's definitely more in the areas where it's people that can afford it. We haven't seen anything as yet that is increase in value on a property having solar. Having said that though, if you're looking to buy for a property and it has solar, it certainly has more drive, right?
Yes,
to get more eyeballs. And I think the banks, in terms of their loan to value, in terms of the percentage, they have pulled back. And I think it's being mindful around what's happening with the economy. And I think it's prudent. I think you have to.
Agree with you.
Just in terms of the spend. So we have seen that.
You're right. There's a specific portion of the market that really can afford it, and that's investing in it. But if you can, from a rental perspective, it really makes a difference. If you have two apartments that look identical, spaces the size, you can achieve a slightly higher rental by providing some sort of alternative backup power supply. A study that was done about 4 years ago by the University of Pretoria, and they used a sample size within Pretoria, and they said with solar and alternative water supply, you can increase your property value between 3 to 5%. Now that would be very interesting to see how that will be changing. So if someone from the University of Pretoria that did the study is online, please continue that study. We would love to see how that really impacts it. So property performance overall in South Africa, and we look at property from a capital growth perspective, and rental, we obsessed with what the gross yield is. And yes, we would, as an investor, look at your net yield. So what the cost of maintenance, etc. is. This is our gross yield, so rental versus the base of the acquisition. And again, we see how sectional title and full title perform very differently. Interesting is that we see full title came from a high of 8.2%, and it has not quite recovered. It's sitting at just over 7%, 7.01%. If you look at sectional title, where it started off at this low at the 3.8%, and it's really moved up. It was at 10.7% when it was just before COVID. That was at 2017, 2018. During COVID dropped to 10.01%. It's going to 10.21, and we expect that to tick up in the next quarter as well. So this is driven by the rental escalations that we've started seeing coming through. Landlords have to increase rentals. It's no longer a question of, I'll take the pain. It's the duality of interest rate hikes, cost of capital, but also rates and taxes, maintenance, security, all those things that is paid for in most cases by the landlord, those have increased well above inflation. And we're still seeing escalations below inflation. So there's still some work to get done. But overall, we've seen that the sectional title has recovered. We're seeing that full title is recovering, but doubt that full title will reach that 8% in the next 2 years.
Just looking, this is now going back 2000 to 2022. I think just the interesting aspect here is just to look at that spike in the green line, which is your purchase price. That is kind of your 2008, the value that we're seeing, and then the volume. You can see the volume 2008 was way up there in terms of transactions that were actually happening. And we just never have gotten back there, which is really interesting. So, yeah. Just talking around national inflation. So this is something that Lightstone does every year, is we have a view in terms of how we see the value of property actually growing. So if you are buying a property, this is obviously at a national level. This is basically saying you could look at an increase of 3.8% in terms of value of the property. So obviously, if once you start drilling down into a lot more detail, it's once again gets down to a suburb level and almost right down to the property in terms of return on investment. But this is at a national level to try and understand what's actually happening on the property side. And at the bottom, you can just see kind of a view around provincial and municipal as well, and just how that's faring. What we generally find is that national in some instances are higher, and then in some instances your municipal is actually higher.
Yes.
So obviously in Western Cape you're going to be seeing that going to be quite a bit higher than your national.
Comes back to location.
Yes, absolutely.
And we drill down, and due to the fact that we can't go into a lot of details, we also look at rental performance on a yield perspective as well as capital growth. So total returns on top performing suburbs. And you can see suburbs that shows a return of 38%.
Wow.
In literally a few kilometers away, you're sitting in returns of 5-6%. And it plays very well into that estate living space, because that's where you see that 34%.
Yes.
And we will be publishing a top 10 performing suburbs in the main area, just for people to have a good idea of what it looks like. When we spoke about a little bit of a rental escalation. You talk about rental, your inflation in terms of property and the growth. And I kept the time series from 2014 to give us a good indication of where we came from, because COVID has really just changed the landscape of our statistics. But we're sitting at a 4.32% escalation overall. Very interesting is that traditionally you had the various rental value bands. They weren't as close as they are right now. They're all sitting at the 4.06, 4.02%, except for the West, for those paying between the 7 and 12,000, the high demand area, they are the highest at 4.28%. The rental brackets of 3,000 or less, that red line that you're seeing there, during COVID, they never dropped below, or they didn't drop as dramatically as the higher rental brackets. But what we've seen with the impact on consumers, those that really do not have disposable income, we're seeing that they are sitting with more vacancies. So the various property owners are pulling back a little bit and saying, okay, stay an extra 6 months, I won't increase your rental, just to try and see it. And that's where we started seeing them in like Q1, Q2 of last year. We're starting to see that escalation to cool down compared to those high demand 7 to 12,000 rand rental per month market.
And then just linking into kind of price performance, this is obviously based at a property type. It gives you a view in terms of your national, sectional title and your freehold. So linking into kind of what you're saying, you can see the lines are not very dissimilar, which is always interesting as well. Your green line sitting at the top. which is your freehold. Sectional title is really interesting, as we don't see the price performance in sectional title as much as we do on freehold, which is always interesting because it's sitting there as lower than the national, which in itself also speaks to kind of value. But also just speaking to what you mentioned earlier, just around investment, right? It is the time for an investor to kind of really consider this. It's a buyer's market. So sectional titles are at a point where they will tick up. It's just at the moment, that's where they're sitting.
And I know you published some really interesting data around who's buying and where they're buying. And again, that needs to be considered beyond just property value prices. It is all the other factors that drives and keeps South Africa very interesting, but drives that and who's buying where. And I think that's if you are an investor and you do have cash available, you don't have to gear or you don't have to rely on interest. It is a good time to go and find those bargains, especially with the rental market. In our view, there's high demand and there's a need for people to find places to live. Just to understand where and what that is.
We do have a bit of a generalized question on this while we're here. So the question is sort of from an estate agent, as a sales pitch to prospective buyers, is it a good idea to push them towards the purchase of investment properties? And specifically, she's asking from a Western Cape perspective, as it looks like from a vacancy point of view, they're able to keep their rentals full at the moment.
So let me touch on the vacancies, and again, it depends on location. When we talk, this is a provincial average. Then you also need to look at, is it freeholding, is it sectional title, is it for instance, a retirement village structure. So these are some of the considerations that will also help. But looking at it from there is demand, but on the pricing side, and what would your advice be in this? Advice?
So definitely investment in Western Cape. I think at the moment prices are high, but I'm also have a view that it's probably still going to go higher. So if you're wanting to invest, then the Western Cape is definitely kind of probably the area to look at, and would definitely kind of consider it as the better province at this point to be spending money.
Combined with relatively good escalations, low vacancies, and tenants that are paying their rental, which it's great to have a property, but if it doesn't bring in the cash, it doesn't show that return, it's just a property, and you can't just bank on capital growth. So the tenants are, a bit later we just touch on what that looks like. So I also think that there is definitely a couple of other areas. Just do research properly and find those investments. Student accommodation is a subsector, and it's not just a Western Cape phenomenon. It's a national phenomenon. So again, what asset are you looking at investing, and pushing buyers to say, well, rather than buying a big property, why don't you buy 2 or 3 smaller units? You spread your risk, etc. House price performance by value band, and we specifically added these looking at the various value bands, and how I find it's performing very similar to our value bands from a rental perspective. Yeah,
and this is where you kind of start seeing a little bit more fluctuation. On the national level, it's a lot more smooth and it looks very similar. Now, when you start breaking it down into the different values in terms of properties and what they've sold for, you start seeing a difference in terms of the lines. So your luxury, you can see, is kind of went down your 2019 just before COVID, and look at the spike that kicked up after COVID. There was a lot of flurry around it.
And confidence.
Absolutely. And you could afford it. The interest rate was great. I think one of the things that we also find is that our luxury band is actually an indicator for us in terms of where the market's going. So if luxury starts dipping, we know that the others will start dipping. If it starts picking up, we know that the others will start picking up. So, and then low value is really a market on its own, and you can see that with the orange line. It doesn't track to any of the other normal markets.
It's completely differently.
Completely different, but always higher, right? So it also just tells you in terms of, what you're going to get in terms of return back. There is in some areas, once again, location, there's a big return on low value property. So just to be mindful in terms of where you buy.
Okay. And you talk about that low value, that 3,000 Rand or less a month rental property. If you look at their escalations, if you look at their vacancies, they've always performed slightly above. And then when there's extreme economic shocks, that's where you see the big dip. And a varsity professor of mine said, if you want to see the prediction of a GDP, look at new car sales. So now I'm going to be looking at luxury property sales to see what's happening in the property market.
Absolutely. And then once again, just looking at provincial, probably also very similar to your rental. You start getting a sense in terms of where the provinces are that are performing. Your red line is your Western Cape. You can see, so the interesting thing around Western Cape, we spoke, I don't know if you recall the bubble. There was a there was a conversation point around Western Cape having a bubble, and you see that.
Yeah.
You see the drop in 2018 when the prices of the properties actually realized to what they were actually in terms of the real value. So we saw that drop. And then we had COVID, right? And it's now just kicked it up again. Which is really, it's great for Western Cape. So we're starting to see a climb there. Your Gauteng is your green line. Very kind of level. It went kind of down a bit in COVID, slight uptick. Really hasn't seen the upticks that some of the other provinces have seen, which is really interesting. And then also your KZN, also kind of an uptick. Your Limpopo going through a bit of a dip, which is also quite interesting at the moment. So that's your orange line. And your Eastern Cape, we spoke around Eastern Cape, and you can see the uptick there, which is really interesting. And I'm kind of wondering, the drill down of where that could be, and it's probably things like your Jeffreys Bay or your, that we're kind of seeing an influx of people again. And so yeah, it's really good.
We're definitely giving ourselves more work to drill down into that Eastern Cape after this, because it's interesting how it spiked and it dropped, and we see almost the inverse with the vacancies taking place. So rental escalation by province, and we looked at how each of these provinces perform. And we, look, sitting the Western Cape as sitting at such a high escalation, if you look at it compared to the other provinces. But if you go back to 2015 and 2016, you were sitting at above 8% escalation within the Western Cape. It is now just sitting above 6%. So it still has got grounds to make up. Yeah. If you then compare that, for instance, to KwaZulu-Natal, it hovered just a touch above 6% and then kind of came down. It never dropped to the same levels as Gauteng and the Western Cape. But we are seeing that little dip taking place now, where KwaZulu-Natal is looking at a bit more vacancies. So they're sitting at 5.0, is it 5.04%? Hopefully our viewers can see the screen better than I do. My eyes are not what they used to be anymore. And then we've got the smaller provinces, and they've also performed well. They had an earlier dip in their escalations, but they've always been under national average. And that's what we combine Limpopo and Mpumalanga. And although we have a lot of data there, we combine it to make sure that our data is really robust, because you do have certain areas that's got 700 or 800 properties that goes on, they increase it by 8%. So we really make sure that we bundle these correctly. But the smaller provinces, some performing better than others. Interesting, Limpopo has not been performing badly. Free State has taken a couple of knocks when it comes to escalations, but it's looking overall, it's on the upward trend. And yes, it's not going to help inflation. But there is, we need to make up for that de-escalation that took place during COVID, and landlords took a lot of pain during that time to assist, but also to look after their assets. Residential rental good standing, and for those that's new to TPN, those are tenants that's paid their rental in full and up to date by the end of the month. So they've met the obligation. As a landlord, you've received your rental, they've paid you their utilities. And why we track this is to say, great, you have a property, yes, you're achieving good rentals, the vacancies are low, but at the end the tenant needs to pay. And the banks track this on a bond perspective, so they publish bonded individuals in good standing, and we do it for the rental market. But overall, we're just sitting at just over 81% of tenants in good standing, and we've performed, I think, considerably well in the economic environment. The higher, the Western Cape, as well as the Eastern Cape, they've performed well above the national average, but we're starting to see slowdown, and that slowdown is taking place. And the rentals below 3,000 is really the ones that is struggling as the economy is taking place. We got our cue that we've got 15 minutes left, so I'm going to quickly run through what the future holds. That is what we ultimately want to see, and these are some interesting forecast scenarios that last night when I was reviewing our presentation I found very interesting. So I'm leaving this up to you.
Okay. So at Lightstone, what we do at the beginning of every year, we do kind of a scenario planning. So we kind of go, well, how is this year actually going to pan out? And with a couple of factors and how those factors play out. So if we look at as a conservative economic growth view in terms of forecast scenario, if we have a modest GDP growth of 0.3%, we have a core CPI drop to 4%, less aggressive interest rate hikes, not really great for us at this point, so probably not going to be the scenario that works out. Gradual decline in house price index. Then we're kind of saying, well, we're probably going to end on a 2.3% by the end of the year. This is kind of where we see kind of conservatively it going. If there is no economic growth, so this is your low road, right? So this is kind of your GDP falls to 0%, your core CPI settles at 3%, you have accelerated house price index, you're resulting in negative trajectory for 2024, and you have modest rates. This is kind of where we're saying you're probably going to end at 0.9% by the year end. And the recovery piece is kind of more of an optimistic view, is if we recover sufficiently, the GDP growth expands to 1.1, we have an increase on CPI to 5.5, and your interest rate hikes of 200 basis points for the year in total.
For the year in total,
yes,
okay.
so just bear in mind. Then we're going to end on 3.7. So I think where we're sitting at the moment is our view is we're probably going to end on a 1.8, 1.9. So kind of between your conservative, your low conservative at this point. Unfortunately, the interest rates haven't helped. They've been a lot more higher than we've anticipated, and quite a few more than we thought. And I'm not sure that we're going to get away from it either. So I think there might be more in the year. So that's kind of where we're seeing it.
And the volatility of the rand, a lot of products being brought in, and again, inflation is we import a lot of inflation well.
We do.
And that really makes life very difficult for the South African Reserve Bank,
yes.
as the other levers within the economy is actually hiking prices, electricity, water, municipal cost, rates and taxes, which is a lever to reduce interest rate, reduce inflation by reducing that below.
Yes.
That brings down overall. So the villain is not the South African Reserve Bank by putting this up, because we are bringing in a huge amount of inflation.
Yes.
In closing, and I will leave the slide up and then we're going to move over to some of the questions from Gregory, is just to look overall what is tenants doing and what landlords can expect. We really had a very good run from looking at recovery from COVID. Performing in some cases above what we did pre-COVID from a tenants in good standing. Again, that sweet spot between 7 and 12 and 12 and 25,000 remains above the national average. But when I pulled the data a couple of days ago for quarter one, is that you start seeing that recovery slowing down. And that is a clear indication of where consumers are.
Yeah.
I think we all feel the pain at the end of the day in some form or way. But those that paying less than 3,000, the value end of the market is heading to a spot to where they were in COVID. And unless we start creating more jobs and we start creating an economic environment that's stable, we're going to see some of these numbers dropping to below the 80% mark, which is a concern for us. We're going to move over to Q&A. Gregory, do we have some interesting and not so difficult questions to start off with?
Yes,
I don't think you're going to have any difficulty because you have told everyone everything that they need to know in the session today. We don't have any questions.
Oh, that's
No, thank you. Thank you very much. Ladies and gentlemen, thank you very much for joining us today. Hayley, thank you so much for your time. We really appreciate sharing the insights, and we will be definitely doing a follow-up on this one. I think with this we provided some really good value and see what's happening in the Eastern Cape.
Thank you, Valdo.
Thank you. Thanks very much.